Welcome back to Market on Close. I'm Caroline Woods. Just a few minutes left in the trading day. It's time for the big picture. Let's welcome in Nathan Peterson, Director of Derivatives Analysis, Schwab Center for Financial Research. Nate, thanks so much for joining the show.
Oh, you're welcome. It's good to be here.
Yeah, it's a great day today in terms of green arrows. Want to give you a chance to weigh in on the gains. To your credit, I read your notes before that, not tweet, but post on Truth Social, I guess we can call it. And you were already technically starting to see some signs of bottoming, and then the post came out. So fill us in. Did we hit the bottom? What do you think?
Yeah, it was interesting. You're right. Yeah, coming into this morning, I was like, wait a minute. Futures are up with the China escalation and the EU escalation. This was like the first day that we saw equities behave positively to bad news. Then you look at the other check boxes. We had a 50% Fibonacci retracement that was kissed on Monday. That's the Fibonacci retracement from your October 2022 low to your February 2025 high, right down to 50% on Monday. We saw the 90% volume that was down to up. We saw the VIX above 50. We saw the RSI at 23. So everything was kind of lining up for a bounce. And of course, this is like holding a volleyball underneath the water and letting it go with the news that we got this afternoon. So it's great to see. So, yeah, having, that was going to be what I planned on talking about, Caroline. And then now it's kind of like, well, let's talk about what do we need to look out for in terms of where this bounce might pause. And technically speaking, we're coming up right against that 5,500 level. So that was the first time we hit the March 13th low. We came back down and we retested it. And then that gap down below 5,500 is exactly April 3rd when we got those announcements. So that's the first line in the sand to take a look at. And then if you look at the 200-day SMA above that, that's where you see that middle peak in there, and it's around 57.55. So 5,500 and then 57.55. Those are the levels that I think that you want to keep an eye out here in the next couple of days or so, just to see how the S&P behaves, because the news is great, but there's still the uncertainty around China. 10% is totally doable, but it's only for 90 days. And we're just in a different environment right now that I feel like than January, where we could have a forward PE of 22. Right now, if the 270 EPS on the S&P 500 remains intact, we're right now at a 20 forward PE. So let's not get too excited like, everything's solved all at once. But it's very nice to see the green on the board.
Yeah, to your point, and we've been making this point all show, tariffs aren't going away. This is a temporary pause. According to the headlines, President Trump wants to be involved in every conversation. And then China still does have 125% tariffs, and then the retaliatory 84% tariffs on the U.S. So how should investors navigate from here knowing that?
Well, we're still in this. I mean, look at the VIX. The VIX is, still up above 30. So that's reflecting that. What does President Trump want to see from these countries? He doesn't want 10% tariffs. He's kind of suggested that that's not enough, and that he would like to see, other policy changes around currency and trade, etc., so that those imbalances, in his view, are corrected. And that's where that variability lies, that how much willingness is there from those countries, how much give is there, economically speaking as well, that they will meet Trump at some point in the middle where there will be that resolution, where we can have clarity and where we don't expect it's going to change in a month. And so that's really why, you have to be mindful that we still have that back burner item of this of uncertainty that's still boiling a little bit. And it's nice to see this relief rally. And I'd say, look, go back to, the pain you've been feeling over the past couple of days. If you're concerned about the uncertainty with most of the majors up 10%, now you may consider, or tomorrow, if you're concerned about putting on something like a collar strategy, if you wanted to get some of that protection, sell a call, out of the money call to fund your out of the money put that you buy. That's your protection. You select the expiration, but that would be some type of an protective strategy you can put on with the VIX at 32 or wherever it's at right now. So it's still expensive, but the collar helps to, really take down that cost.
Okay. All right. And obviously recession forecasts have been, or, the recession risk has been rising. That could change if we do see these tariffs, it's substantially in the longer term cut. But what would pricing in a recession look like? You talk about the S&P 500 coming up against a 5,500 level, potentially 57, 55. I mean, what if in fact we do have an economy, or the economic impact is too much from the tariffs? What would pricing that in look like?
Sure. So coming in today, let's just talk about that. We were basically at an 18 PE on the S&P 500, down from 22. If you look at a historical, multiple on a recession, it's about 15, 16. That would take you down into the low 4,000s on the S&P 500. A lot of the, analysts that I've been reading out there in terms of their estimate of a recession, 50 to 60%. So the S&P was telling you, okay, we've moved up to a 50, 60% recession. We're going to take us down to an 18 PE. And they were finding support there, technically, Fibonacci retracement, et cetera, because we're not 100% recession, we're 60% recession. So therefore, the market's kind of feeling that out. Is 18 PE, is that a good multiple? And, this is a very dynamic environment. Things can change really quickly. So I'm not etching anything in stone right now, but I feel like that was the price action here. But we should be aware that if we go into a recession, and by the way, Goldman Sachs said they are rescinding their recession call. So we'll be aware of that. But they are looking for, I think, 0.5% growth. And so there's going to be slower growth. And so that's something to be mindful of. But if we go to recession, 15 PE, the question mark is, okay, is it 270 on the S&P 500? Is it 250? We don't really know that, but we do know it likely would take the market down eventually to around that 4,000-ish level.
Okay. All right. We'll leave it there. Nate Peterson, Director of Derivatives Analysis at Schwab Center for Financial Research. Thanks for helping us navigate through this.